Ginika, is this your apartment?
Uh-huh.
That's nice.
I have
Makes sense.
upgraded. I think you're the only one that's upgraded.
It makes sense. It makes sense.
Well, this makes sense. This VC just really, Ginika, come and invest in our fund now.
I swear.
Come and invest in our fund now. Hello, everyone, and welcome to another episode of Squad Academy. As you guys can see today, the environment is a lot brighter. Clearly, it's not just two dead guys on the call today. So we thank God. We thank God.
We added some lights to the room, you know.
Add some lights in the room, man. Some of us need ring lights to make us pop. Some people don't need ring lights. They're just popping like that. They're just popping. But we thank God. We thank God. But no, we have a distinguished guest, someone who we've known for years, someone who's also been part of Squad for some time now. But yeah, Ginika Obioha. I'll let her introduce herself because I can't honestly. I don't even want to mess it up. I don't want to mess it up.
You know, when you're introducing a distinguished guest, you can't like miss any line. You can't understand.
This is a lot of pressure.
But yeah, Ginika, please introduce yourself to the guest. They already know Edessa. Edessa is already a dead guy, so just introduce Edessa. But Ginika, please.
The floor is yours.
Hi everyone. So I'm Ginika Obioha. I'm currently an investment associate. I work across two funds, so Factor E Ventures and Equator VC. What? Don't read the sound effects. I have a background primarily working in startups. So I started my career working in startups, kind of understand the landscape of Africa, building a company from idea stage, hiring people and building the team, getting the product developed, actually getting clients on board. And once I was done with that, I went into investments and the VC space. So I previously worked at a few startups, one of which is notably Daystar, who were acquired by Shell subsequently. And then I went into Arewa Capital. It's a gender-lensed growth equity fund. And then, like I mentioned earlier, I'm now at Factor E and Equator VC. And I'm very, very happy to be here. Thanks for having me, guys.
Thanks for being modest and not embarrassing us. Embarrassing, but trust me, guys. Ginika is very well accomplished. And the one thing that we always say week over week is that we want to always try to educate as much as possible. And one topic that we've always wanted to touch on since the start of this year is just more so the overall VC landscape and more like our predictions for this year. And what better way to do that than to bring someone who is actually in there day in, day out, trying to help and impact the Nigerian tech ecosystem. And you guys heard it, she just said it. She was so good, she has to do it twice. She's doing over two funds. So guys, this is not just one fund, over two funds. All right. So no, thank you so much, Ginika. I know you had a busy schedule. It's Saturday afternoon for you. You could be out there doing yourself or doing some of that thing. But we thank you so much for getting on this call and sharing your knowledge with us and the audience as well. So thank you very much. Thank you very much.
Always.
All right. So okay, let's not be like I don't send this guy. Edosa, how are you doing?
I'm doing good. Thank you for checking in on me. Thank you. Well, I mean, straight to it, right? I won't lie to you guys. Full disclosure, that was pinging me throughout this week saying, have you read up on the topics, this and that and that? I would like to get, I didn't read anything. I just wanted to come here. When I just said Ginika is coming, I said, I'm coming here with my biro of paper. I want to learn. I want to learn. Like, who am I to, what do I want to read? Like, when you have a legend in your midst, you guys properly. So again, this is called to our own benefit. That one, we're not trying to be selfish. We want to get Ginika's knowledge.
My person is here.
Exactly. So you guys are not getting Jara. We want to learn from this podcast, and that's why we brought Ginika. And I mean, another personal story. Ginika is someone who like says the truth. She can dissect a company into pieces properly. We used to get her on our due diligence call before. Even me, projects I've done before, I'll call and say, I bet check this out. So let me know your honest opinion. And she will respond, say, give me a week. No, she won't tell you, I'll tell you tomorrow. She'll actually say, let me sit down, kill this thing. So give me a week, and then she'll give you a call, proper feedback, end to end on your project or your startup. And like you've seen in her CV, she's worked in companies. There are many investors that don't know what it looks like to run and operate a business. She's worked in companies, seen a company get acquired. Talk about exits in Africa. Then she's also done VC, some thematic VCs, meaning like gender-focused VCs, to industry agnostic, to energy focused VCs. So she's done it across the board. Proper knowledge, guys. You guys should be paying us for this, but we're just doing New Year bonanza for you guys.
So it's funny you said that. I still remember those calls, man. Ginika would just sit on those calls, just be asking the tough questions, man, dissecting this stuff. I'm like, wow.
Okay. I'm texting that for private, like, Omo. I'm like, oh.
Man, I still remember those calls, man. Thanks for bringing that up. Thanks for bringing that up.
You can't be a joke as a founder and scale through Ginika's due diligence. That's just the truth. That's just the truth, you guys. Yeah.
No, but you guys, as they're talking about me, I'm like, I see me that these people are this.
No, but the ones on the receiving end.
Yeah, exactly.
But that's nice. That's nice. But that's a perfect segue into what I have to discuss. So pretty much, Ginika, I know last year was brutal.
Yeah.
Last year was brutal. We saw funds, actually other programs like YC only have one cohort, and I think that cohort only had 3 startups. This was summer last year. That was really the only program they had last year. We saw startups shut down, close office. We saw startups struggle even raising capital. And even going on to this year, we're still hearing news about companies laying off on a global scale, right? Whether it's the US or Nigeria or everywhere, like it's still bloody. Interest rates are still high. And there's still some geopolitical things going on, right? Across the entire world. It is an election year here in the US as well. So that's also going to play a huge factor. Last year was Nigeria. This year is
election year. Yeah, exactly.
So all these things are going to play a huge factor into how folks invest and the appetite for just what we call high risk investment, which is the tech startup ecosystem. But throwing this back at you because you're living and breathing this stuff every day.
Yeah.
What's that been like on your end, and what are you guys seeing over there within your firm?
Honestly, it's been very tough. Even for funds as well, not even just for the startups. Because I mean, it's funds it's capital that funds receive, right? That we deploy into.
Exactly.
And like you touched on, interest rates have gone up, right? So generally, the risk appetite globally, not even just Africa, has gone down. So less people are less averse, or more averse rather to equity investing. More people are putting their money in debt. So generally, even funds that like had targets of first close, second close, they're not able to meet those targets. I won't talk about my fund specifically, but raising capital has been quite tough. And because of that, fund managers are more like prudent in how they're deploying capital. So before you see like fund managers looking at like the profiles of founders, maybe they'll look at what's your customer base, or looking at like your top line growth. But now everyone is very particular about like margins. So what are your margins? That's really where the buffer is, right? That's what kind of shows your resilience. If anything happens, how big of a buffer do you have
to sustain yourself?
Exactly, to sustain yourself. So fund managers are a lot more prudent in deploying capital. And that's why you've seen like a general decline I mean, people are still investing, right? But compared to last year, it's almost like gone down by 50%. It's quite drastic. 2023 or 2022. Exactly. So capital being deployed has gone down. You see a lot of startups, at least with my fund, we saw a lot of companies coming to the market with down rounds, quote unquote, so lower valuations, or we'll call it like bridge rounds, to raise like a little bit of capital to sustain them ahead of like a larger round. So that was something that we saw a lot. People with lower valuations, companies in almost distressed situations, looking to just raise little bits to kind of give them a bit of runway, because what they raised, they were not able to manage properly. Lots of fund managers are looking for capital efficiency. And so it's why I see a lot of companies laying off, because they're trying to manage their cash better and focus more on operational efficiency and growth. At least that's what 2023 was saying for the most part. So yeah, generally it's been a tough market, both for funds, for startups as well. And you cannot just kind of come to the market with bluff anymore. We saw that a lot in 2020. People were raising like ridiculous amounts, ridiculous valuations. But like everyone is like, what are you actually doing? Like, who are your customers? How much are you making? What are your margins? Very, very particular before they deploy capital. But yeah, that's the general general trend of what's been happening.
No, thanks. Thanks for giving that because I've always been curious, right? Like, I mean, because most of the news that we see over here is just primarily focused on startups, right? So like we hear startups shutting down left and right. Now, of course, I mean, I know one or two people in the VC space who kind of struggle to even like close their round, right? Sorry, close their fundraising round just based off what's been going on. But primarily, most of the news that I've seen has been in the startup within the startup space. So for I guess and I don't know how much you can disclose, but like on your end, like how much did you guys struggle last year? So like when it came to, because I'm sure compared to 2022, you guys probably had targets for 2023, right? Or maybe a certain amount of startup that you went to back, um, based off your average ticket size. I'm sure you had to close a certain number of deals as well. But like, what was that like 2022 to 2023 like? And how are you guys positioning yourself this year?
It was tough. You even with startups as well, like the flow of, I was reading a report, let's say not exact numbers, but let's say 1,000 companies went to the market looking for equity in 2022, 500 came to the market so deal flow has gone down significantly. And then for my fund, for example, we're very, very specific. We're a climate impact fund. So even trying to find like quality, because like I said, the criteria for investment has changed, right? So finding companies that even meet that criteria was very, very difficult. And so just full transparency, the number of deals that we did last year compared to previous year was much less, and the team even expanded. So you'd have expected that with a larger team, you're doing more deals. But we did less than we anticipated. For this year, we're trying to be very optimistic, trying to kind of broaden our pipeline, to find deals, partnering with other funds in the similar sectors. Hoping that we'll see more deals. For example, I'm talking to Techstars. I know they just finished their cohort in November or something. So those companies are coming to the market to raise capital. So ahead of coming to the markets, like, what do you have in pipeline? What can we potentially partner on in terms of companies? So yeah, it's been tough. Number of deals has gone down. Number of companies even coming to the market has gone down. But you are still deploying capital. They're still fund managers. Fund managers have even left the continent. Some of them are focusing more on like America, like developed markets, because it's more safe, right? Africa is a bit risky. A lot of devaluation that's been happening over the past like 2 years, especially in Nigeria. So that has been another major problem, right? You see a company and you want to deploy dollars, but your revenues are in Naira. So how do you mitigate that risk? I mean, there are lots of all these instruments, but they're not really advanced in Africa. So it's very high risk. And, you know, a lot of the investors are a bit like, let me pause on this. How can we find a way around this? Or how can we substitute our capital with debt to kind of make this better? So yeah, that's kind of what we're seeing, at least in our fund and generally as well.
So the last point you touched on, I get curious about that because we talked about it, how it was 500, 600 Naira per dollar like last year before elections. Even less than that. And now it's almost, double that. So yeah, 1,400. So within a year, we've seen destruction of value, meaning that if you almost double your revenue last year in Naira terms, you are still behind, almost at the same place. You almost showed no dollar growth, even if you double your Naira revenue. So how does that kind of conversation happen? Like give us, you're a real VC, you get real portfolio. So how does that actually happen like for VCs? Do you guys have annual, quarterly, or do VCs in general, you don't have to get specific on your portfolio, have annually or quarterly calls with the startups, or is it just based on they send you guys email updates? I might see something shocking like 0% dollar growth in revenue, where you're meant to be a growing, your idea startup is to grow. So you see $0 growth. How does that conversation happen? Do you guys say, what the F? Or is it that you call the person? Is there a in-house meeting? Is there an intervention? How does that, walk us through what that kind of happened like for you guys?
I mean,
or VCs in general?
How much intervention can you really do? The market is the market, right? Like, not like we go and call CBN and ask them to kind of buckle up. But one thing that we try to advise for at least portfolio companies is that they diversify, right? So the valuation that's happening in Nigeria is not as bad as what's happening in Kenya, or the one that's happening in Egypt is not as bad as what's happening in South Africa, right? So even us, for example, we're looking at Kenya heavily, also Nigeria, but now we're looking at South Africa because you have to kind of diversify this risk. And one thing we also try to encourage with our portfolio companies is the expansion across different markets, again, to diversify this risk, because if your portfolio is concentrated in a country like Nigeria, you're pretty much doomed. Unless there's a way to export there, like maybe there's a way to generate dollars or something. But for the most part, most people are generating local currency, right? So we just try to focus on expansion out of just one region. How can you expand into other markets to kind of diversify this risk? I think that's the core thing to kind of tackle that problem, the valuation problem. One thing I didn't touch on, which could spark further, is sectors.
Okay.
Like in terms of trend. So you saw a lot in 2022, a lot of funds going towards fintech. That was like the bread and butter of a lot of funds. I mean, fintech is still, in terms of sector that received the most funds, was still number one. But compared to the previous year, it declined almost 50% as well. Like there was a significant decline. But I feel like fintech keeps attracting capital because of what they're doing for the economy. So in terms of like bridging gaps between like individuals, businesses, financial institutions, and also like bringing in underserved or the informal markets and bringing them into the ecosystem. So I feel like that's why funds keep flowing towards fintech. But another sector, or other sectors that have been attracting a lot of capital have been like agri-tech, climate tech. You see a lot of funds now moving more towards sustainability. So that's another thing in terms of trends and like how the capital is flowing across different sectors.
So another quick one. While we're on what's it called, sectors, we saw a crazy phenomenon last year. All you had to do was slap the word AI on the back of your company's name in the US, and your valuation just went. So that's something people don't talk about much. Despite the general average decline last year, one sector literally went to the moon, which was AI, right? It got a lot of attention, and everybody that was risk averse suddenly found confidence when it came to like AI, particularly in the West, like US, in developed markets. Have you seen that in? I haven't seen any like AI tech focused Nigerian or African based startup, but have you seen that, or have you seen climate tech companies trying to like embed AI into their
so like I was about to say, it's not even just like abroad, like in the Western markets. Like at least this year alone, I've seen 2 or 3 companies that we're actually looking at that have AI. I was looking at another one the other day. It was one AI agri, and I was laughing because I literally remembered like someone was saying how all you need to do is just slap AI in front of your name or in like your product description and then capital. So you see a lot of companies now doing that, even though they didn't have any AI focus. They're like, oh, product development, when computing in machine learning, AI, this thing. But yeah, we're seeing a lot of that now. Some actually have like solid products that they've developed, like done proper R&D over like maybe the past 2-3 years, and are bringing that product to market now. Those are the ones that we're kind of looking at. But yeah, you also see a few that are just slapping on AI for the sake of it. And if you ask them to even talk about in depth about what they are doing, it's just bluff. But yeah, no, it's not just in Western markets. We're seeing that a lot in Africa now as well, particularly South Africa, actually. Nigeria maybe hasn't caught up as much, but we're still seeing some of those AI companies here as well, for sure.
But that's spot on. That's oh god. I have my own thoughts towards this whole thing, but yeah, this whole AI thing, because it just fun enough, we were talking about that the other day, how like what a lot of people are calling AI today, like 5-6 years ago, that used to be machine learning, right? But now the AI buzzword is just so catchy that everyone is just slapping it on their products, right? And many a times, like there's really nothing that's really artificial intelligence. There's just it's just software, like it's just you just coding something doing on there, right? It's not really machine learning. It's not really anything, some kind of but I don't even. But I mean, but to be fair, following what Ginika said, I do think at least at least on the government side of things, they are thinking about it. Because I know Boston Tijani was at Davos, was it last week or so, 2 weeks ago?
He even recently posted, because he asked for AI
Yeah,
founders to
exactly.
like,
Because
okay,
last
like
year he
about
was
10 agri-tech AI companies.
exactly. Because last year he gathered like a list of experts in the diaspora who were like AI experts, right? To really put together some kind of team that can work on our AI landscape and what we can do as a nation, right, to really promote that sector. And this year as well at Davos, he actually was very outspoken about how Nigeria needs to set up an infrastructure. I know we're talking about the $2 billion projects that's going to put internet cables across the nation to really provide fast speed internet, right? Because then again, you need infrastructure to even
Who's
promote
doing
this
this
kind of
project? Who's doing this $2 billion project?
I mean that's
Yeah,
Bosun.
audio is hope. It's ambition. No audio, it's ambition.
Is hope because that goal is to really like install those underground fiber cables, right, to really
Yeah.
enable fast speed internet. Now I know he said it's not the government that will fund because they need the private investments, right? They need private investment to really fund that kind of project. Because the government doesn't have that kind of capital to be doing this kind of stuff. So, and I think this is why they're traveling, they're really going to places, speaking, and trying to really promote Nigeria, right? And it's fair. I mean, they have to do that part.
Yeah.
People have to buy into the whole idea. But yeah, but at least just show that this whole AI thing is on their mind, right? I mean, and even if the private sector doesn't necessarily drive it, but at least within the government, we need some form of intelligence, whether it's data gathering or processing or whatever it is, right? We need some of this stuff to really enable the government run more efficiently. But yeah, I just wanted to just add that to what Ginika said. But I was even going to ask something. The one thing that we saw last year, and this one I talked about this last week, was yes, and I think you already mentioned this, Ginika. Fintech didn't have that much impact. I mean, as far as the reliance that as far as the numbers wise, I think 2022 was about 61% raise of what the capital was fintech. Last year that dropped to 45%, right? So you can see maybe you can see maybe it was 2023 that was kind of like a blip year just because of everything. But at the same time, it looks like other sectors are now catching more steam as well, right? Um, do you think that was just due to last year, or is this go back to the point that I made that other sectors are just growing and fintech is just maybe people are getting tired of fintech, or maybe people are just noticing that there's only so much that you can do within fintech, right? And then at some point, just all the same thing. Like, what do you think is going to happen, or what do you think is really happening within that fintech system?
I don't even think people are like afraid of fintech. I think what they've seen is that there are a lot of companies doing very similar things in the fintech space. At least initially, you had companies actually like innovating products, but now you see a lot of very similar companies. So there's less capital flowing towards that. Again, a lot of people were kind of looking more at like top line numbers, customer base, and not necessarily paying attention to margins. And when the economy got tough, you found a lot of fintech companies really, really suffering because they had not really built that buffer in their operations. And so I feel like that's another reason why versus like health tech or agri tech or climate tech that are more resilient. So that's why you see more capital flowing towards these other sectors. There's still a need for fintech, just not as resilient as at least some of them as some of these other sectors. And that's why you're seeing the shift in focus. And I feel like it will be a similar trend this year. There'll still be going towards fintech because I mean they do have the numbers, and they actually are doing something in terms of like formalizing the informal sector. But there's also a lot of growth in like clean energy, clean tech. I feel like that's kind of the new a lot of funds are now kind of focusing on renewable stuff, either renewable products like solar, batteries, and the likes, or like e-mobility. Those are really kind of coming up in Africa, especially East Africa. And so a lot of capital is flowing towards these other sectors. They are actually solving a problem, and they're more operationally savvy. So I feel like that's why capital is kind of shifting across the different sectors.
We'll talk after this, Ginika, because since your fund is primarily focused on renewable, we'll talk after this. Don't worry. But yeah, that's how I'm laughing. That's how I'm laughing. But I want to double click on something, right? Because some Nigerians will tell you, I mean, Nigeria, we are just, you see, our own problems are different, man. All these climate people are doing is not really, our own problems are different. You can see Dangote does launch refinery, that's the biggest in the world. All the oil be pumping. See, our problem, we just want to just eat. What is your clean? We don't care about it, right? So what? So and don't get me wrong. I mean, I'm a technologist. I fully believe in climate
Yeah.
control and decarbonization, all this kind of stuff, right? But how do you guys? Because you guys are even the one that even invest in these startups, right? Knowing fully well that it's high risk for an environment like Nigeria, right? It's still very early, right? But how do you guys go about that? I mean, how do you guys go about that whole process of trying to look for the deals and just keeping your head down, just like, this is what we want to do, although it's a really early, it's a really early sector in a country like Nigeria. But how do you guys just push that narrative?
No, you're absolutely right, right. Even me, like some of the companies I see, I'm like, this one is a bit too advanced for like our problem, not meeting the immediate problems. So no, I'll be lying if I said like that didn't cross my mind. It's a very, very like common thing we think about. A lot of some of the companies that we see were like, what's the product market fit?
Exactly.
But that's so key. You can have a brilliant product, but then introducing it to the African market is like, oh, are we ready to really take on this product? But some of the areas that we also look at, I mean, as you guys know, fuel prices. What I used to fill up my tank for 7K last year, start of last year.
Yep.
Now I fill up my tank for almost 30K, so more than doubled, right?
Jeez.
Exactly.
More than
Some people
triple.
are filling up their tanks for 70K, like ridiculous amounts. So that kind of brought on a great opportunity in the clean tech space, especially for e-mobility and like solar companies. Even though they were struggling a bit in terms of having to educate the customers on like the need for it, you're not saving money immediately. There's a like high upfront cost, but down the line. But as soon as fuel prices went up, a lot of customers or people were looking for alternatives because a lot of businesses are suffering, right? Majority of their personnel costs are going towards diesel or fuel. Exactly. So they are now looking for alternatives. So I feel like that was a good, even though it was bad for the individuals, it was kind of good for companies and for funds that are in that space. It brought on a very unique opportunity at the right time. So that's kind of what we're looking at. But we're also looking at, for example, like carbon credits and stuff. Again, it's a way to also kind of de-risk the companies. So solar companies that are doing installations and stuff, you can export your carbon credits. So that's another way to kind of generate dollars.
Revenue,
outside of your net revenue.
Sorry, who are you exporting to? Who are you exporting carbon credit to? Is it UN or who?
So it's like US government and
Is it US government? Yeah.
Institutions that buy
an American corporate. Yeah.
Oh, okay.
Foreign companies. So there are companies that are now like validating these like carbon data and like looking for channels to kind of to like you said, who are people buying these carbon credits?
Nice. Okay.
Markets to buy carbon credits. So that's another space that we're looking at because the way of really diversifying. It's not your core operation, but it's the way of really diversifying your revenue streams. So those are kind of the angles.
That's nice.
That we're looking at in that regard.
Okay. I think that's even a perfect segue into what we want to do next, right? Because I feel like if you start digging deep into this, we'll start talking about projections for this year, right? So let's just pivot into that because we wanted to get Ginika's overview on this market and she had educated us. My paper is full. It's almost full. Okay. So we'll just move on to the next one, which is projections, right? So starting off with the first one, right? And we can go around that. I mean, it doesn't matter. But of course, we want to hear from Ginika first. The one thing that we already touched on is just the FX, monetary policies, right? So we know last year, now we might have different opinions on this, but last year, the first thing that Tinubu did when he got into office, I think it was even the day during his inaugural speech.
Yeah.
Did not even wait. That day in May.
May
right? Was it May 25th or May 23rd or whatever it is, that day on the podium. He said that he said fuel subsidy is gone. Fuel subsidy is gone, and he said they were gonna maybe a couple of days after they actually flooded the currency, right?
Yeah. Okay, finish your question because I want to interject.
And it actually flooded the currency, right? And that's what caused about the change that we all now know today when it went from I think what was it then? Was it seven something?
700, 750. Yeah.
Yeah,
Yeah.
on the black market to what it is today now. As of this morning, I believe it was 14 something.
Yep.
I mean,
700.
that's not now those of us who they really use money, they really check this rates daily. Um, see, all of us know the rates on we're in the rates for this for today. So, so based off this policy that I put in place, based off what the government is doing, whether it's seeking loans, projects that are launching, whether it's the refineries that are taking online, whether it's the fact that are clearing the debts that they've had with international companies, to boost more confidence in the Nigerian economy. Like, but what are your projections for this year? Like, what do you guys think things are going to shape up to? And you can give a range of where you think the rate is going to drop down to, or you could just give like overall um an overall just an overall thoughts on what you think is going to happen this year, whether it's going to get worse or get better. Like, Ginika, what do you think?
This one is a tough question because I feel like Nigeria, like I always say in economics, right? That's my background. You study all these things in theory, but I feel like Nigerian market in particular, we don't follow. You say,
Yeah.
okay, this happens and then this is meant to happen, but then the complete opposite happens. So people were saying that what the dollar naira rate will flatline at 1,000, and like you said, I changed money for like what was it, 2 weeks ago, 3 weeks ago, and like we said, today is 1,400. So I honestly, from the bottom,
1420. That 20 is very important.
like to be precise, like I honestly do not know. I feel like you want to be optimistic and say that it wouldn't grow past a certain amount, but I feel like we've been saying that for the past few years now. And it just keeps slapping all of us in the face. I really don't know what's going to happen with our rates. Honestly, I don't know.
Yeah,
I feel like
and if you want to
sorry.
touch on that, yes, sorry, were you done?
Yeah.
Yeah. So I keep pinching myself about that. You mentioned something, you said we're too optimistic. And that's the truth. I wish I was like a cutthroat analyst. And when I hear some BS, I just do the financial thing. No sentiments. Think now, hindsight 2020, of course. But when we look back now, that day our chief and president announced that they are floating the currency and that they are removing fuel subsidy, right? Textbook policies couldn't have said, but as a businessman, as an analyst, I should have just gone borrow heavy naira, convert it to dollar, and just sit down and wait. Take that bet that these guys are kidding themselves, right? I mean, confidential story. I know someone who like went for, I think the previous government inauguration, Buhari's inauguration, that 8 years ago, and the guy came back and said, "Look, those people bought new G wagon, and it was a campaign based on frugality. It's going to be business as usual." So some people, some very strict businessmen, businessmen and women, they use quick maths, and they don't lie to themselves, and they quickly align, right? And they quickly prepare for that. It's so painful that I didn't do that. Like, so startup wise, if I heard that, okay, that devaluing currency, I'm saying this thing is going to anyhow because we don't really have dollars. Our oil production is reducing. Everything is just against us. So we don't have any dollar to defend such a quick and abrupt thing. I should have just bet the worst on Nigeria. But I am Nigerian, so I keep hesitating. Now it's 1,400. I'm like, I can't go beyond that now. But like, there's crazy, and that affects us. And I wonder how you match that being like a VC who's meant to like invest and make money versus a Nigerian who wants to see the best in Nigeria. If I were maybe a foreign VC, how do I play that? Maybe I would have literally ignored Nigeria for the whole year. First of all, I ignored during the election because I'm like, who's going to win? It's going to be cool. But after the election, if the campaign is to devalue, I just think that my startups are going to shit. Either I try and start selling at secondaries right there and there and exit and just wait, or wait till like December when they're very, very desperate and do vulture investing, right? So it's also painful that's why maybe now that we're talking about this year, should we wear that same strict hat and say let's call it what it is, or should we bet that Bosu Tijani will do the $2 billion, pipeline and all of those things? it's what conflicts me when I'm trying
So
to.
you said it perfectly, Edosa, because this is literally me in my team meetings, right? Because I'm supposed to be representing Nigeria. And sometimes I'll be thinking, these are not working for Nigeria. I'm saying the worst about like our economy and what's going to happen. Like you try to be optimistic, but because I feel like a lot of things are still hanging in the air, right? Tinubu has said he's going to do a lot of things, a lot of different policies, this, but nothing has really materialized the way they said it would. So there's so much uncertainty. You really don't know what direction anything is going to go. So I'll stay with that strict hat and just take your bets again. Are we airing
Against
this?
Nigeria, yeah. Almost, and it's not really again because, like you said, Inka, let me rebrand that. Our value as VCs, I say our, I don't get too funny, so, but like our value as VCs is that somebody has bestowed upon you capital and said you're a custodian of this capital.
Yep.
You know more about Nigeria than I do. So take bets or positions in Nigeria that will give me financial gain, so that I will want to come back 2 years after and even double my investment in Nigeria. So if one of those your bets is saying back off, that look, I saved the money by just even staying in cash for this whole year and doing maybe virtual investing when the startup became more desperate and stop that silly valuation. You see a lot of down rounds. So those people that invested in those down rounds, technically those investors were the winners in a way. They're saying, I'll wait, you'll still be humble. I'll come back and wait. Understand? So as a VC, we almost have to be that, and that way you're helping your LPs
Exactly.
extract value, and they say, okay, this guy really this person really navigated Nigeria well during this time. Let's double down. That's what I think.
Even in terms of this uncertainty, like as you're just speaking, I was thinking about like the companies that we have in Nigeria as portfolio companies. They're either exporting something to another country outside of Nigeria, or they're not taking on debt, because debt is a whole nother. You're taking on dollar debt.
Dollar debt, that's so painful.
So risky. It's so equity is one thing, but to now take on debt.
That's that's the even worse stuff. Yeah.
Like in a whole other position. So we just try to stay away from those types of companies, unfortunately.
Was venture debt popping in Africa like last year and the year before? Because definitely talking about a fund, all this fundraising data, like how much of it is really equity versus venture debt? And I mean, what did you see like last year and the year before? Were people really like absorbing that, like Nigerian companies, Nigerian startups?
I would say there was a lot of venture debt. But I know a number of it went into East Africa, Kenya.
Okay, thank God. Yeah.
Interesting.
Because it's less risky than Nigeria. Our problems are too much. This devaluation is a big killer. Like, and the fact that there's no end in sight, it just
no plan.
Exactly. So there's still venture debt. So like I was looking at one report, and there's a significant amount last year, although less than 2022, but it didn't drop as much as equity. So people are still doing it, but I know that the amount of venture debt that went into Nigeria went down significantly compared to what went into like Kenya or East Africa, like other like relatively safer markets.
Yeah.
Okay. So I'm just curious, before I give my own stance, I'm just curious. So if you both had to pick, right? I mean, it seems like you guys are more on the realistic, pessimistic side, but you don't want to fully be on that side because if I imagine people's money, if I imagine people's money. So if you have to pick one side, do you think it's gonna get worse? Do you think it's gonna get better, or do you think it's just going to be more so flat this year? What side are you picking? Because come end of the year, of course, we'll go back to these predictions and see how we did, right?
Yeah, that's a great question. I mean, I think it will get worse before it gets better. I think it may get better maybe towards Q3, Q4, but I feel like Q1, Q2 is definitely, while things are kind of still settling, I feel like it's going to get worse.
Okay. So, Edosa?
Yeah, taking notes.
So we'll come back to this end of the year.
We'll come at the end of the year now.
That was already being recorded. Like, no, I'm gonna write this down. Ginika said that. But I totally agree as well. And when I say it will get worse, in what sense? In terms of fundraise, I think there'll be less. There'll be flat, almost similar to 2023, or even worse. As far as fundraise amounts, startups will probably decline in valuation this year. look at January already, they're probably just in dollar terms, the revenues
Yeah.
didn't move the needle in January. I think startups will decline in valuation this year,
Yeah.
and there'll be less fundraising, and some companies may go bust, just like we saw last year. Almost every month there was a company announcing shutdown. Last year, I think Okada Books, which other startups? So many startups went bust last year, and there were many scandals for people trying to, all the companies that were running on vibes were not trying to really pay out, and they couldn't pay out their customers.
Yeah.
So, yeah, so I think it looks like it will get worse this year, and I think the winners of what, I guess that's your next question, right? So I'll
Yeah,
wait
yeah,
for
yeah,
that.
yeah, exactly. Yeah. So that's sort of for now for now. Okay. So I just also you think it'll get worse this year. Okay. Oh, that's fine. But still get better somewhere down the line.
I,
I
I don't think it will get better. Let's just say 2024
2024 will be worse. Okay, be worse 2024. Okay.
will be
Okay.
bad. Let's say it will be bad. We never know
Okay.
what wars will be in Nigeria. It will be bad.
Okay, so are we talking about Nigeria exclusively?
Yeah. Tell me now, yes.
It makes sense. Yep.
Yeah.
Okay.
I feel so bad saying this, man. It's like I'm betraying.
No, I mean it's fine because I mean this is what's gonna guide your whole investment thesis rather than approach. So that's fine.
Yeah.
I actually do share Ginika's thoughts as well. So I think it will get worse between Q1 and Q2. But I think, and maybe this is just me looking at previous data. Now I know you say Nigeria is different from other countries. It's not the same thing. But just studying other economies like Egypt that floated the currency, seeing how they went through some tough phases over the first year to year and a half, first 18 months or so was quite rough. That currency was heavily devalued. But over time uh it kind of got better, but that was just based off the policies and some of the things that they put in place. Now I know it's hard. Now I'm not being overly optimistic when I say this, but I know it's hard to see or to feel some of the things that these guys are doing. But maybe this is just because I just try to follow them as closely as possible. But they're really doing some things. They're really putting some things in place. But I know as Nigerians, it's hard to really be optimistic because they've shown us shaggy over the past couple of years, right? So it's just hard to even recognize these things. But I do believe when some of these things come online, once they clear the debt sheet, whether it's the ones that they have with the
Airlines.
airlines and all this kind of stuff, right? Once some of these products go online and we're actually exporting and we're actually generating dollars for the economy, these are things that would not just boost the revenue as a nation through tax or whatever it is, but also improve investment in the nation, right? So I mean, you just have a general positive attitude towards the country. So because right now everyone is just scared, everyone's just running away, right? Companies are leaving left and right. So
Yeah.
I think the sooner we start generating some revenue as a nation and we start exporting more materials, I think the better for us. And I think we're going to do that this year. Now, I know some of the refineries are taking time here and there, but at some point they have to come online. At some point they have to come online. Now I do think yes, we'll get worse in Q1, Q2, but I think by Q3, Q4, some of these things, start seeing some of these things going to go into place. So okay, so now we have one prediction down. All right, moving on to the next one now, because it just rolls into it. The biggest startup winner. So actually, we'll first go from sector, then we can now identify like a startup that we think will actually win this year. And this is just prediction, right? Like one startup that we have in mind. So Ginika, back to you. What sector do you, I guess you can be biased, but like what sector what sector do you think is really gonna pop this year and what startup are you really picking within that sector to be a major driver?
Yeah. I think I'll even start by like country and then go
Okay.
into
That's a good one. Yeah.
Okay. I like that.
by country. I feel like East Africa or South
Mm.
Africa will be winners. Nigeria will still be like in top 5 companies receiving capital, but I think this year we're like maybe number 2. I feel like we may drop down further.
Yeah.
I know you mentioned like all these like refineries and coal coming up, but then we also have a lot of these like large multinationals also leaving, and I feel like those are really bad signals for foreign investors.
Yeah.
I feel like it will make them even more averse, and I feel like less capital will flow. There'll still be significant amounts of capital. There's still a lot of opportunities in Nigeria, but I feel like compared to previous years, it may decline.
Okay.
There are probably at the bottom of like the top maybe 5 companies. In terms of sector, I'm biased. I feel like clean tech. I feel like clean tech will, because we are seeing a lot of impact investors coming up, climate impact investors. So I feel like that's where a lot of capital will flow to.
Okay.
See a lot of companies operating like SaaS models, and I don't know if you guys are like familiar with
Yes, yeah, software as a service, yeah.
software as a service, exactly. So it kind of limits your need for working capital / debt. It also helps a lot with your margins and how quickly you're able to scale. So I feel like those types of companies in clean tech sector
Okay.
or even outside other sectors I feel like those companies will thrive more than like hardware or like I feel like those are the companies. Agri-tech as well. I feel like agri is never really going away.
Yeah.
It's so broad. I feel like there's always a need to advance something in that sector. So I feel like
Yeah.
that sector is going to be very one of the dominant sectors as well. Fintech too, but not just no, I don't think as much. I feel like fintech wave is kind of dying down. I feel like it has almost reached its peak and is kind of declining a bit. Yeah.
Do you have any so East Africa, South Africa, major winners, clean tech will be a key sector that will really grow for you this year. Do you have any particular startup in mind that you think will really blow a lot of people's mind?
Except from your portfolios. So
Yeah.
don't feel like
That's a great question. I don't think I have any particular. Let me think about that one. I don't think I have any particular startup in mind
Okay.
that really stands out at the moment. A lot of the things that I see are companies in that clean tech space. But no, I don't think there's any particular company right now that comes to mind.
Okay. All right. Got yours down. Edosa, over to you.
Yeah. Geographically, I'm biased because, well, I don't read about much of the other regions in Africa, just maybe once a year. So this is uninformed prediction. I would say North Africa and East Africa is what I'll bet on, just based on their trend in this past period. I don't rate West Africa is heavily carried by Nigeria, which I'm obviously bearish on. I don't believe they'll perform this year. South Africa, I don't know, just their politics and stuff. I'm not well versed on that, so I'm placing more bets on East Africa and North Africa. Then sector. I don't know, man. I feel like, and just speaking of Nigeria alone, not entire Africa. Nigeria alone, as far as sector, I would say in terms of what, in terms of them succeeding, revenue growing, fundraising flowing towards them, I would say everything but fintech, right? Just like we saw in this year's 2023's data, those health tech, agri tech, climate tech, they all had huge growth compared to fintech. Obviously, because fintech is already big, so growth is
Yeah.
So I think everything but fintech will grow, and fintech. You're holding your inventory is naira, which is a devaluating currency. So it's a dangerous sector to be in, and your expenses are AWS bills, which is in dollar. So they're just a very tricky, and people are getting poorer. So nobody's even moving money. So your volume is reducing. So that's why I'm bearish on fintech. I think every other sector but fintech will grow. But as far as who a winner will be, I don't know any company in particular. I don't care about them as much to mention, to mention them. But I'll say companies that are already this 2024 will be for existing companies. Companies that already succeeded before.
Yep.
They're already now like they already have their moats, they already have their staying power. So think the Piggyverse, the Paystacks, Flutterwaves. This year is for them. You're not going to expect new guys to start showing up in flashy suits. You know how during 2019, 2020, we had Kuda Bank, there's the rise of new fintechs and new tech companies from nowhere, and we're already breaking ground heavily. I don't think you'll see much of that this year. They could break ground, but they're like, again, not a. But I think during a turbulent period, only people that have very good balance sheets, very good operational experience, cutthroat management, those are the guys that will actually stay during the war. But every other person that is new will probably come in and come out. And you can also look at startups that closed down last year. I'm sure they were great, but they were also quite young. Except maybe Okada books. They're also quite young. So they just came in and came out of the equation. So that's what I think of for. So if you're going, so if somebody wants to invest, I think again, talk to your own investment advisor. This is just my own speculation. I think you just double down on the guys that are already existing. So if you see if you see a Series E, Series F, maybe participate. But all those angel investing, just pray for them. Don't invest. That could be that could be the pessimistic idea. Obviously, unique cases apply, but in general.
Okay. So North Africa, East Africa, then major growth within every sector besides fintech, and pretty much existing businesses really be the ones to win this year, not any new startup, right?
Yeah.
Okay, got that. For me, I would say North Africa will see more growth, but as far as if you're talking about growth percentage wise, like which one I think will see like a higher jump in capital in flow of capital. I have a funny feeling South Africa will be that region. Just seeing how they've grown over the past couple of years. Seeing how that they even have, I mean, last year they even did better than West Africa last year. I mean, West Africa came fourth. We came fourth on that list. North was first, but North has always been back to back with us, so I'm not necessarily surprised. I mean, those guys have different sorts of fun, and those guys are just different kind of beasts, right? East Africa has always been doing well as well as a region. They have the good policies, they have some really good governance in place, which is why they seem to be more attractive. But I think South Africa really see a lot of growth this year. But we're just So I'll go South Africa as that, and North Africa to closely follow it. As far as sector is concerned, um, I'm coming back to Nigeria now. I'm looking at what is going to be a need for a lot of people this year, right?
Mm.
So we've already talked about the fact that the fuel subsidy already drove the removal of that already drove an increase in cost of diesel, right,
Yeah.
and PMS. So I think more people and more businesses are going to rely on the renewable sources, so solar and stuff. And I think that will drive more growth within that sector.
Yeah.
So I'm going to go with clean tech as well, following what Ginika said. I think that's really going to see a lot of growth, at least until the economy does better and people actually have more income or just more leeway to really afford PMS and diesel and stuff to run businesses. But the way that I saw solar grow last year, I think it's going to continue growing this year because people are now becoming more receptive to the idea of using solar, whether to power their home or businesses and stuff. So I think that's only going to grow more this year. And this is just strictly from a need-buy basis. At the end, like when the economy is not doing well, people take a step back and just focus on what they need, honestly, what they want.
Necessities.
So I'll go with that. As far as startup specific, I don't really have any startup to be. I mean, specifically, I don't be biased in this because I can say my own, but I don't be biased. Okay. So I'll just leave that. But I will say one thing. I think one startup that might win this year, and it depends on how this goes. It could either go boom or bust. But I think Further Wave has to go public this year. At some point, they got to do this IPO. This IPO has been in the works for how many years now?
Well, I know you want to go public in the US. You have like maybe Q1 and Q2 only because Q3, Q4 is politics.
It's politics and stuff, right? So
yeah,
I think they have to go public this year, right? And I think if they go public, it could be a major win for them. It all depends on how the road trips go. It all depends on how they market the stuff. But I think it could be a major win for them, especially since once you go public, there's a lockup period of 6 months. Anyways, folks can always sell, maybe minus the. I mean, internal folks can't really sell their stocks, right? External investors can sell. So, but I think they go public here, they could be a major winner. Because they're seen as the crown jewels of African tech. So I think they could potentially be a major winner this year. But
yeah, and just by being public, they could also be the most public loser. if they go public and I mean no, I'm not saying that if they go public and but they just like the Jimmy now.
Yep.
Everybody not seeing your value every day. That that's what you do.
Yeah. That's what I say. That's it. Could either go boom or bust. They could either go public and boom. Their stock is down to the floor, or at least because I mean at some point, like the last time they raised capital was 2021, I think, if I recall correctly. I think it was a 200 or $250 million round, but they've been expanding and they've been spending money, right?
Yeah.
Of course,
Yeah.
at the same time, they
So
also
something has to give, right? Yeah.
something has to give, man. At some point, like they have, and I don't think I don't think they're cash flow positive as a business right now.
And the investors are probably putting pressure on them to like
Exactly. So at some point, yeah, the investors need to in some way exit their investments, right? So yeah, I mean that'll be my guess. That'll be my take. That'll be my take. So my full chest, I'll say Florida Wave.
That's a solid.
My full chest. But let's see. Okay. Next one. Guys, don't hold back on this one. Man. Your full chest, don't say it. Who do you guys think will be the biggest loser this year? Ginika, you can go.
How I know, but how you come and call a company's name?
yeah.
It's fine. I mean, you can tell me your chest. It's fine. It's fine.
You don't get DMs like, "Hi, Ginika, we heard about you."
I mean, it could be more like from an approach of constructive criticism, right? So like, if they don't do this, they could be the biggest loser.
Yeah, so okay, let's change to Nigerian and say, who should be careful?
Who should be careful? Okay, who should be careful this year?
When I just say, "Yeah, be careful."
I'm thinking of two types of companies. As I feel like, I think it was Edosa that touched on it earlier. I feel like we'll still see some closures of fintech companies. I wouldn't mention any specifics, but I feel like that would be a continuous trend or layoffs. I feel like that will persist in the fintech sector. But also companies that have taken on a lot of debt in Nigeria, foreign debts to be precise. I feel like that would be a major hurdle. So companies in those two buckets, I feel like debts that are being serviced with Naira, like the revenue stream is purely Naira, you don't really have any way of hedging that FX risk. I feel like companies in those two buckets may be potential losers this year.
Okay. That's a good one. That's actually a very good one. So fintech and companies that are probably operating on debt, especially being serviced in Naira. Okay. All right. Thank you, Ginika. Edosa, over to you.
I'll be very honest with you guys because you guys are my friends. A company comes to mind, but just out of I don't just feel like calling that name. You get it's just I'm like this guy. It's like this guy you're going to fail. I don't I don't do that. Just I don't know. I don't know. It's a small world, so bob me for club. So, but speaking vaguely and just to define them vaguely, companies that are into fintech, but more specific into fintech is companies that are into lending should be careful this year. People borrowing more are probably borrowing because they're under pressure, and so more than likely they may not pay. So NPL will be high. So people in the lending space should be careful. Companies that are in leasing, so those guys that are going to go buy assets, and say that leasing as a service or whatever, that is borrowing light. So you're still in the same buckets. I think they should be careful. And companies that were very niche and were not really addressing the broad market, but maybe trying to address the aspirational markets. So luxury services, things like when I say luxury, so in America, Uber Eats is not luxury, but technically it's luxury. You know what I'm trying to say? So those kind of exactly. God bless you. It's better. Non-essential services should be careful as well. So lending, leasing, non-essential, and in general, even if you're in good sector, if your financing structure is bad, meaning you took on, like Ginika said, Naira or because even Naira rates are going up, so Naira or hard currency debt, you should be careful. You get. So those are the three. And the fourth one, those guys are your business is not like FTX, you get, but where you're technically just meant to be holding people's money but you're using it for small trades on the side, which is illegal. Those guys should be careful too, because many people will be withdrawing. It's always kind of business. It's always good when anybody's withdrawing because the economy is good, but when economy is suffering, people are
Exactly.
withdrawing their savings, so you now have to actually post real settlements, and then that's where people know what is under the hood. So those companies should be careful as well.
They never call my startup non-essential. Listening. Okay. Yeah, I think honestly, I think you guys already said it all. You already said it all. I mean, yeah, I'll just echo what you guys already said. Yeah, leasing, lending. Yeah, I think fintech will struggle this year. It's only gonna get worse. I know we saw some closures last year. They will not get more this year. Crypto also struggled this year as well. All those crypto platforms that are just coming left, right, and center in 2021.
Really, you think so?
Yeah,
Many people will be trying to use crypto for. I don't understand crypto at all. But many people have said, "Oh, now that FX is floating or whatever, use crypto for at least moving, buying and selling or whatever." So maybe more volume.
but there's not really money. There's not really money right now. Like that's what I'm looking at.
Yeah. Nobody's really even.
I mean, there's never money in the first place, right? I mean, because you have to understand a lot of these guys, right? And I think in 2021, the one thing that really, that really grew was just remote jobs. A lot of people had remote jobs, whether it was in Nigeria, working for US companies or UK companies, whatever it was, right? Now that's slowed down a lot, right? A lot of companies are now pushing for a hybrid model. You have either have to be in office or this or that, right? So like there's no easy or free capital just flowing anymore. Like it's not that easy anymore. Like companies are really cutting down. Even the US, like was just this last week, Microsoft announced that laying off over 1,000 employees. eBay announced that laying off over 1,000 employees. Twitch earlier this year already cut off 30-something% of its workforce, right? So company it's bloody. It's bloody, right? So those guys in Nigeria, all those tech guys in Nigeria who just used to have some of them still have jobs, but like those funds will not just be that much anymore where you just want to be using crypto platforms to trade up and down. I mean, there's a reason why Bitcoin really has not shut up. I mean, like it should have, right? Or the Ethereum or any of those things, right? So yeah, buzz will they come this year. All those crypto platforms that were opening up left and right, they'll still show themselves this year.
Speaking of jobs, wasn't there one founder that I think the company went crash last year, Dash or something like that, where the founder was working in somewhere in the US, so any salary full time, paying himself 15K per month, like from
it was Dash. I think it was
Dash.
I think it was Dash. Yeah.
So yeah, that's an example of companies that like just came in and went out. Yes.
It depends though, but I just think folks not just here need for crypto this year, man. Like boys are angry in Nigeria, man. Boys are hungry. Like crypto is the last thing on our mind, man. I don't like. I'm sorry, man. I'm sorry. And I'm not saying there's no need for blockchain or crypto. I'm just saying like this year, like boys are not smiling this year, man. Boys are not smiling.
And sadly, betting will probably go up this year as well.
Betting will go up this year, actually.
Yeah,
betting will go up this year. Yep, that's actually a good one. Betting. So shout out to your own for winners.
No, yeah, sure. You want to
I mean,
I don't know if it's tech.
Is it best tech? Is it best tech? What do they call it?
You can be on that tech.
Okay, I mean, they have websites.
Oh, they have websites, man. At the end of the day, okay. So we'll leave that one out for now. But I think betting will go up this year. I do agree. Yeah. Okay, what's your most anticipated trend for this year? Like, what do you think is really going to just trend in general? Like, just it could be anything.
I think people will get more creative and innovative this year. They'll really put on a thinking hat and get more creative, which is a good thing. So we'll see some new approaches to things.
Yeah, I mean, necessity is the mother of all invention, right?
Exactly.
So, okay. Like I said, Ginika already had a thinking hat on.
I'm just thinking like positive trends. I think also following from the outlook, like how last year performed. I think companies will be more, I touched on this earlier, more prudent with their cash, with their expenses. I mean, see a lot of like startup founders taking a ridiculous amount of salaries or like even paying their staff. But I feel like a lot will be very, very, very cautious about their spending. Also kind of ties into their margin, just being more operationally efficient. I feel like we'll see a lot of that.
Yeah. I think people are going to get really creative this year. Yeah. people are really going to get credit this year. Like I think there are going to be certain processes and standards that will be created this year that will kind of enable what the next phase or the next stage of running businesses or tech startups
Would
in
look like.
looks like for the next couple of years, right?
Yep.
So I don't think we've ever gone through, like, I mean, tech in Africa really became a thing in 2016, 2015, right? And we've never gone through this kind of phase before. So I think this is more like that there are a lot of best practices that'll be created during this
That we
period,
created from now, yeah.
right?
Remember the days of Conga, Jumia, Printivo. And after that set, you now had like the pay stacks. After that set, you now have the Kuda Bank and Co.
Exactly.
So yeah,
Exactly.
interesting.
So yeah, I think there's going to be a lot of best practices created this year that will kind of shape up what it means to run a
Yeah.
tech startup in Africa for the next decade or decades, right? So I think that's what's going to happen. I think that's what's going to happen. So I guess that's something. Okay. I guess that falls under operational excellence, anyways. But yeah.
Yeah. Yeah.
Okay. And the last one word that describes your vibe this year, or one word that describes the overall sentiment for this year. I think with 2 words. Let's make it 2 words. 1 or 2 words. 1 or 2 words.
You know, I'm stubborn, so I'm with 3 words. Well, I don't know if it's even 3 words, but I think I've seen it on social media a lot, but I think it's true. CJ has no grief for anybody. That's still going to be the vibe, bro. No grief for VC, no grief for startup, no grief for anybody, bro. Everybody's eyes are red, bro.
For me, I think it's transformation.
Transformation. Okay.
In every sense of the word, across businesses, economies, I feel like there'll be a lot of transformation this year.
Okay. That's a good one, actually. Yeah, I guess we can say that. I would say
Just combine it. Say no grief for transformation.
I would say resilience, right? But that's just going on the backs of last year, right?
Yeah.
I'll say resilience. I think, yeah, because I don't think, I think a lot of things will be born. A lot of, like I said, best practices, BKMs here and there. But that's also going to just help drive more resilience with a lot of these startups and companies, right? So I think this will be the year where companies would need to be more resilient. We were resilient last year, but we need to be more resilient this year because I don't think it's going to get better Q1 and Q2. I don't think so at all. Although inflation on the larger scale has been curbed, but interest rates are going to stay high up until probably maybe Q3, Q4. So resilience, man. Resilience. Okay. All right. And there we go. We have our predictions for 2024. So maybe we might do a mid-year review. You should get up to change if you want to change your answers. Because I feel like some answers there will be changed
I'm looking forward to that review.
By that July, some answers there will be changed. So yeah, we could do a mid-year review and end of year review as well. But yeah, that's all I had for today. Ginika, anything that you missed that you want to touch on? I know you've already blessed us, but you can still bless us some more if you have anything.
Yeah. To touch on that, Ginika, like, when I say a final question, is more of this. Everything we almost said sort of kind of looks gloomy and is cautionary advice, but then to a startup founder listening to you today, and maybe even a VC investor listening to you today, what's the why? So why still touch Nigeria? Could you like shed some light on that? Why bother? Like with all this scary stuff, what's our why? Give us some motivation, I beg.
This is a lot of pressure. No, but to a founder, I feel like Nigeria, as tough as it is, there's still so many opportunities. Like we spoke about, for example, the taking away of the fuel subsidy and how that has taken like fuel prices up. So I feel like there's still a lot of solutions. There are a lot of problems that need solutions. And there's still a lot of investors that are looking for. It's just that you can't, the way startups were raising money before, just come and give us a few nice words, go to the best schools, buff up your profile. Like those things are not selling as much anymore. You really have to put your head down and actually like operate your business, figure out, and in advance, because I feel like this is a lot of things that, I mean, and it's also tough in Nigerian markets, right? Kind of looking ahead to kind of foresee what the potential risks are and prepare for them in advance. I feel like that's something that a lot of risk analysis, I feel like that's something a lot of startup founders need to start doing, to just prepare for the unforeseen circumstances. But it's not all the way gloomy. There's still investors looking to invest. Just have a solid product, solid unit economics. Because before you saw companies that were raising on like negative margins, but that's not as much anymore. So really like zoning on your operations or your like cash management. And don't just start off. I feel like a lot of startups also try to do a lot too quickly instead of like dominating one particular space or product and really like what's the word I'm looking for? Like mastering that and then expanding to different. Lots of people try to do a lot of things at once. So finding that your core products that are solving a proper solution, build what's the word? Establish a grounding on that, and establish your market in that space, and then potentially expand into other things. Those are some words I would give to founders.
Awesome. Well, thank you for that. Thank
Bro,
you for
that really uplifted me. I won't lie.
yeah, thank you for that. No,
No, thank you for that.
yeah. No, me and Ginika will talk. We'll still talk offline. We'll talk
No,
offline.
there's hope.
Yeah, that's good. That's good. But yeah, Ginika, once again, thank you so much for hopping on this call. I know it was literally does hit you up during the week if you wanted to do this, and you were more than happy to and gracious with your time. So really do appreciate that. Like I said, we'll try to do a media review to look at some of these things that we shared today.
Looking forward to it.
Heads will roll, heads will roll. But now, so guys, I think that brings us to the end of this episode. Guys, you know the vibe. Like, share this with your network. Let us know your thoughts, your feedback. If you guys also have your predictions for this year, let us know. We have the paper is I can add your name to the list. So don't worry. There's no shame. We are full chest. Let us know what your predictions are for this year. But yeah, thank you guys for listening. We'll be here again next week, same time to do this over again. Different topic, because I know we didn't necessarily talk about anything that happened this week. So probably next week we'll look at what's happened over the past 2 weeks and try to summarize and give our thoughts. But yeah, Edusa, any final thoughts?
No, I mean, I literally want to end it on Ginika's note, because that's very uplifting. So, guys, there's hope. The market is big. There are still opportunities. Let's be honest. So
Yeah.
you just have to match up those opportunities with the right kind of investor. And to be fair, any patient dollar investor who's thinking long term, 10 years, whatever, you're actually is worthwhile considering Nigeria. Let's be honest.
Yeah.
Those opportunities are there.
Yeah.
Yep. Well said. And with that, we bring this podcast to a close. Guys, have a good week. Stay blessed. And we'll see you same time next week. Bye-bye.